Hello and welcome to The Rate Stuff, your essential guide to all things mortgage. Now, regular viewers of The Rate Stuff, I've not really spared our blushes. Some of you have said that Peter and I tend to bang on a lot about mortgages. Now, we take that on the chin because mortgages is what the show is all about. But, of course, mortgages are only half the story. A mortgage is just a means to buy a home. And to talk about homes and the property market, we've got a real-life expert in the studio with us today. Matthew Cumber, welcome. You're Managing Director of Countrywide Surveying Services. Delighted to have you on the show.
Thank you, Jack, and thank you for the invite.
You're very welcome. Peter, you may get a bit of a breather today because you know how I normally fire loads of questions at Peter at the end of the show. It's all you today, Matthew, so you know what you've signed up for. Anyway, let's start off with a quick roundup of the big news because we have had a bit of a bombshell on the inflation front today, Peter. We're recording this on Wednesday. CPI data this morning for July, bit of a blowout number.
It was. So expecting around 3.7%, it was higher at 3.8%. So obviously not good news there. Core inflation as well was up. So again, not good news. They were expecting inflation to peak around 4% in September. That number's probably looking in doubt as well. I think what that's probably going to mean, or is looking at the moment, is the rate cut that the market was perhaps expecting in November is probably in doubt now. So my view is probably looking at the next rate cut, maybe now 2026, which is less good news if, we're expecting lower rates in the market.
Peter, you always bring a ray of sunshine to the show. Matthew, can you do better? Can you give us some more positive news? And we did have some quite good news on the house price front. So at the same time as the inflation figures, we had the house price inflation figures from the Land Reg. They showed that in the year to the end of June, the average price paid went up by 3.7% nationwide. Regionally, of course, big differences though, aren't there?
Yeah, there always will be. And those regional differences can shift quite quickly within about 3 or 4 months. So if you look at the whole of the UK at the moment, house prices are particularly quite strong in the south, but a bit flat in the sort of the northern areas, like Scotland. But saying that, you've still got pockets in the northwest and central belts as well in around the Midlands.
Well, one of those pockets is the northeast of England. So they saw average prices go up by 7.8% in that 12-month period. That is 10 times as fast as average price in London. So big differences there. What about supply and the numbers of sales? Obviously, with your estate agency business, you must have a good sense of how much demand there is from sellers and buyers. What's going on the front line?
Yeah, there's still great demand for houses out there. Even if you just drive around yourself, you can see an increase in the number of for sale boards going up, which is great for the housing market full stop. And number of transactions is up this year on last year. The number of properties on the market to be sold this year is up as well. And I suppose talking from a valuation side of it as well, we are busy, and we are busy, interestingly enough, in likes of outer London and the southeast as well, which is encouraging for the market as a whole. But overall, yeah, really, really pleasant sort of improvement in the market out there.
Okay, so some good news on the house market front, but there are storm clouds gathering, potentially with a bombshell announcement from the Chancellor. Okay, so what was that cliffhanger all about? Well, it is a potential bombshell on the property tax front. The media has been aquiver this week with reports of the introduction of a mansion tax, some sort of change to capital gains tax on the sale of property. So let me bring in the Brains Trust here. Peter and Matthew, this is not stamp duty, which is, of course, a tax you pay when you buy a property. It's potentially a tax on when you sell a property. Still very much early days. We don't yet know the detail, but it's starting to look like some sort of change to capital gains tax. At the moment, you only pay capital gains tax if you sell a second home or a buy-to-let property. You're exempt of CGT if it's your primary residence. But it looks like the Chancellor could change that in the autumn budget to make you pay capital gains tax on a primary residence as well. Peter, your first thought?
we're still seeing the details, but what was out in the Times yesterday seems to suggest that properties over 1.5 million will pay CGT at their marginal rate, which could either be 24% for higher rate taxpayers or 18% for lower rate taxpayers.
And that would be a tax on the gain that you
Tax
made.
on the gain, in addition to obviously paying stamp duty when they purchase the property. I think that's a pretty bad idea. First of all, because obviously the tax they're going to pay is going to be pretty horrendous, and it takes away the principle that you don't pay tax on your main residence. Mm-hmm. And secondly, it's going to create this massive cliff edge in the property market. And, any properties at and above that value are just not going to sell. And any properties below that number that could get anywhere near 1.5 million aren't going to go up in value.
It's true. Matthew, the story first came out in The Guardian. The figure there for the threshold
was talking about 500,000.
500,000.
500,000. So if it's 500,000, you're dragging the whole of the London and South East into being captured under this supposed new mansion tax or whatever they're calling it. If it is the higher level at 1.5, even then, you can't get much inside London, really. They're family homes. These aren't exceptionally wealthy properties. The proposal is to tax family homes, additional capital gains tax on sale. And if it is still on top of stamp duty as well, it seems highly unfair. Whatever you do when you mess with the property market and you start putting different taxes and different regulations in, is not a good sign for any of us involved in the property market. It will stifle certain areas of the market from moving. And that's not what any of us really want.
Well, there's a couple of things here. Obviously, the government has got this big fiscal black hole they need to fill. They need to make more tax. They've tied their hands, all those pledges about not increasing tax on working people, whatever that means. But is this the answer? And those thresholds, so we've got 500,000 and 1.5 million. As you say, Matthew, if it's 500,000, that is going to be the whole of south of England, pretty much. But 1.5 million, that's not very many homes. They're not actually going to make very much stock revenue.
It's ticking the box, because I think you just killed the sale. So apparently there's 120,000 homes that sold in that bracket, but it's just not going to sell. So, I mean, as soon as you put a tax on that, you're just going to kill the market. So that might have been the number previously. It's not going to be the number going forward. I think in principle, I mean, stamp duty needs reform. Everybody agrees. Anybody in the market agrees that stamp duty needs reform. First-time buyers, for example, having to find a deposit of, typically 10% or even more, plus they're having to find 20, 30, 40,000 pounds in addition to stamp duty. I personally think that, stamp duty paid on gain on sale is not a bad idea in principle, but it should apply across the whole market. You shouldn't have this artificial threshold saying, gain on sale is paid at 500,000, 1 million, 1.5 million. It should be paid across the market. So you don't have this artificial, threshold. And there shouldn't be, gain on sale in addition to paying stamp duty upfront. That's my personal opinion.
What about the impact on downsizers, people who perhaps got a large home?
Jack,
this is the disincentive on them selling.
You're going to stay put, aren't you? You're not going to want to sell that property if you're getting to an age where you're looking to downsize or maybe move to different parts of the country. If you're likely to get hit with a whacking great big tax bill if you sell it, you're going to stay put. And that is then going to stop everybody else trying to climb the ladder and keep the transactions that we want in the UK moving.
So that's kind of family buyers, people who maybe need to move to somewhere larger because they've got kids. Those family homes just aren't going to sell. And you're going to have older people rattling around in a 5-bedroom house with the kids having flown the nest.
It doesn't satisfy anybody at any part of the housing transaction chain, either people downsizing or people wanting to move up. You're going to hit that threshold or whatever level it's set at, and then you're going to have a problem.
I get the impression, guys, you're not totally enamored with this idea. So I think one of the things that is clear is that we are already, getting a sense of the pushback that the market is going to give to it. The fact the government has announced it or leaked it this far out from the budget is perhaps a clue that they're kind of running up.
It's a sign that something is coming. It's a sign that something is going to change, because you're right. They've run it up the flagpole to get the market's feedback.
But, I mean, it's not going to raise any... I don't know what sort of level of money they think they're going to raise from it. Clearly, it's not going to be what they think they're going to raise, because it's just going to crush the market at that level.
Is it just another political statement around we're not hitting working families, we're hitting people that can supposedly afford it?
You can see that playing well with the Labour Party base. It's a tax on the wealthy, it won't affect anyone in the north. You can see it's politically palatable for
But it's
them,
not the wealthy. I mean, I think we're getting the wrong target audience here because, a £1.5 million house, as Matthew made the point, is not necessarily that wealthy in London. And a lot of people have invested money in their house rather than their pension. And that's a 3-bedroom, terraced or semi-detached house in lots of lots.
There are probably homes that people bought under the right to buy in the Thatcher era that are 1.5 million plus now.
Yes.
What's the capital gain on that? It's going to be 1.5 million pretty much, isn't it?
But without going too much into which way your politics sway, what is being proposed here is not going to benefit either the Treasury in terms of the receipts it's going to get, and it definitely won't benefit the housing market.
Okay, the verdict is in from Peter and Matthew. It's not very favourable. So, Rachel, if you're watching, think very carefully if you put this in the budget. Let's just take a chill pill. Things were getting rather heated there, and this is my favourite part of the show, actually. It's where I get to sit back and put someone else on the spot. And today, Matthew, it's you on the spot, not Peter. Peter, you can take a breather. We've got some good questions for you. First one about first-time buyers.
Okay.
They're always described as being the key to the property market. Are they back?
I don't actually think they ever went away. I think we look upon their first-time buyers, and if they're not at the levels that we expected them to be at, everyone gets a bit downbeat about everything. But I have to say, in the last couple of years, first-time buyers are definitely back. Even if you look at certain geographical areas, let's take London. Half the homes bought in London, I'm talking outer London, first-time buyers. So that is extraordinary. That percentage is about 30% in the rest of the geographical country. But in London, that is really pleasing news, because I just think that will bring a nice positive sway for the rest of the country.
So that suggests strong demand and affordability as well.
I think the lenders, and I know this is more Peter's sort of area than mine really, but the lenders have changed their affordability rules. There's more products for first-time buyers come into the marketplace. So the supply of products for first-time buyers has just got better and better over the last couple of years.
Yep, I agree. I think lenders have sort of gone out of their way to sort of help first-time buyers with different sort of income stretches on LTI, more availability of products. So yeah, it's been good for first-time buyers.
Good news.
So less reliance on the bank of mum and dad.
Still got a lot of reliance on the bank of mum and dad, but general better assistance from lenders, I think.
Okay, tick for first-time buyers. Next question here is about sellers.
Yes.
We've seen many years of prices rising kind of inexorably. A lot of sellers have got a bit carried away. And do you think it's time for sellers to have a bit of a reality check in terms of their asking prices?
I never actually tell a seller to have a reality check, because this is their home. This is what they put their life and soul in. Their family might have lived there for 10 years. They love that property. They always think that property is worth more than the neighbour's property. And that is their prerogative to do so. However, what we have seen in terms of the data this year is that we've had more price reduction so far this year than we did this time last year from advertised properties. So that means possibly there was an overinflation of what they thought they could get for the property, but now maybe they're getting a bit more realistic and bringing their prices down. And from a valuation firm perspective, we're achieving those values in over 3/4 of the valuation transactions that we get instructed to carry out. So again, that's really good news.
Okay, public service announcement on the valuation front, because valuations is what you do.
Yes.
A lot of people wrongly assume that the valuation that you carry out for a lender is the same thing as a survey.
Yes.
But it's not, is it?
No, it isn't. The terminology is very intermixable, but let's put it on the record here today. A valuation, and particularly where we're involved, a valuation is for the mortgage lender, so they can be satisfied with the risk that they're happy to lend the mortgage on that property. The survey is for the home owner to actually find out what the condition of that property is like, whether the roof's there, whether it's got damp, whether there are any form of construction problems in that property. Massive difference, because quite often, and a lot of research that we've done, is that people think because the lenders took a valuation out and they're happy to lend, then that property is absolutely 100% okay. It's not always the case.
Matthew, you're quite good at this, aren't you? Peter, I think we should have him back.
Absolutely.
In fact, we'll have him back sooner than you think, actually, because we're going to record an episode of the Rate Stuff Extra very soon where we put Matthew on the spot about new homes being built. Some worrying figures which show that the number of new homes isn't close to the government's target. What can we do to fix that? Join us for that. But for now, thank you for watching The Rate Stuff. I'm Jack Izzard.
I'm Peter Stimson.
I'm Matthew Cumber.
See you next time.